Fire now is closing in. Nothing to bear and nothing to win. Nothing to win. Could you believe? Could you believe? Could you believe? Could you believe? Fire, take my hand, I'll take you higher than you've ever been, than you've ever been.
Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go into the charts. And that entire nice little move to the upside and the downside yesterday ended with a long-wicked spinning top with the value of 6.42% and opened and closed exactly where it started without saying much. That was pretty wild. We did say that it would get that pump from Asia and would it fade into London. It did not fade into London. It faded into New York. But we did call that fade idea yesterday as well, saying that that sweep to the lows just didn't buy it for me in terms of a premium price and breaking out immediately from there. So was sweeping the lows this time enough to start to cause this move to the upside to continue? We are at the 618, just below the 618 of the mean path reversion to the upside. What is this mean reversion path to the upside? Well, we use pitch fans. Pitch fans are located here on my chart. You go to your retracement tools and you can favorite pitch fans. You use impulse retrace ideas and it will put the math from the mean reversion path to the upside or the downside as a result. And we've been holding these since about January 17th, so I've just been leaving it on this Coinbase chart to follow where it's going, and it looks like we are playing within this channel of the 0.65 and the 618 as it seems, and we are starting to break down at the 618, which is a premium level, and we are also dealing with some daily support and resistance lines that we wicked up into and bounced off of. So are we confirming things as support, or is this just an illusion to head down to the other support line at 28,690? Let's go into the liquidity to see what's up. So what is high block capital? Well, people lock their liquidity in the charts to get burnt to a crisp by the market maker, and we get to see where those crispy characters lie in wait and what happened to them and how much leverage they were using. So let's go ahead and do that. So as of yesterday, they made this push to the upside and basically knocked out a lot of these pools of shorts. The $223 million pools here got taken out along with all their partners in crime all the way back here. 236 million also off the table on that push up, and then they did a double top to take out some 100x while also ensnaring some down below. And then as they came up here into New York session with the BlackRock ETF news catalyst release of the pressure, they dropped it. So you could go back and check that. We did put out that idea to you, basically saying, we'll just save the accolades, just say we're going to go up to come down, and it did that with a passion. So let's just do the good old-fashioned fatality. And that's why you protect yourself at all times, protect your stop loss, and lock in your gains as they come. If you're not setting stop loss into profit as you approach these levels, you're needing a wake-up call. So if you take a look here, we also had 331 million locked in on that drop down. So this is why you see V-shaped recoveries as it drops. People also open up shorts into the red candles, and 331 million was opened up in these pools here, and they immediately V-shaped and took back all that liquidity all the way up to this pool at 30,666, and their partners in crime, all of these 50x pools. So now we're going sideways, pinging the liquidity, seeing what interests has come in. We are on the weekend, so they're going to see less pools and more sideways as we go back into grab these 100x pools back and forth. As it stands right now on this 1 minute time frame, there are more imbalanced shorts to longs, although with the progression of Father Time, we lose a lot of what was on the radar for those other pools. We do have a $365 million pool up at 30,929 that we could come back down into. We did take out the previous pools of that nature. If we go down into here, let's just go see what lurks below. So we have some 220. This 331 million got gobbled up. It looks like it's on the outside, but it was actually here that got gobbled up on the V-shaped. So we do have that $220 million down here, 100x at 29,643 that are in a juicy profit that it could come back to. Let's go ahead and see. As it stands right now, there is more thickness to the upside here at the 31,536 region that they could come into on the 1 minute time frame, which is why we need to expand our vision to the external liquidity pools. Shout out to everyone here. Boom, boom, boom. All right, so let's go into the liquidity. We don't need to take a look at that. On the 12-hour, it does say just in the last 12 hours, it's pinged more shorts to longs. Let's go into... So on the 7-day time frame, they hit both of these pools. They took out the 10 billion here and the 10 billion there. They just sweeped both sides. They sweeped it like a a bug under the carpet, sheep, sheep, and then they were gone. And so now you have these different pools residing above and below. It looks like you have kind of an even Steven playing field as of this moment on the 7-day time frame. Let's go to the 1 month to see if there's any imbalance lying in wait. And surely enough, on the 1 month we do have those pools up now at the 30 plus billion, the 32 billion up here at 31.7 to come to the taking. There are some double digits down here at 29.4, and not double digits, just nearly 10 billion. Double digits if you combine them at 29.4 and 29.3. We previously came back into these double digits here that we were talking about sweeping, and they did sweep them up furiously. Okay, so as it stands on the monthly time frame, if you just zoom out to everything, there is an imbalance down here in terms of the this stacked liquidity down sub 25k. This means there's people with trades open in profit, and can they scare them out of the trade? Sometimes they come back down into these regions to get these pools to close out. They may not come back to these pools, but to retrace to a certain factor to hit their stop loss into profit before sending it up to 31.7 could be a play in order. They don't always clear it as cleanly. We've seen that before, and we'll show you on the higher time frame what we mean as we expand our vision to the 3-month pool. And this happened here. As you see here, there was $120 billion still on the table here at 24.6, and they came back down here, spawned some divergence, and shifted out. As they started to build these pools above, they decided that was enough for now, and they came back to these regions. So they don't necessarily clear the hottest region before shifting out, but the imbalance, if you see that start to appear, they do come back into those imbalances. So as it stands right now, they're building a pool at 24.2 at $84 billion. And so at some point, do they fatigue off that and come back into this? The daily time frame is getting overbought. Let's go into the external pools beyond 3 months, into the 6 month and beyond. Let's go to the 6 month first. 6 month also getting that red hot, the yellow hot region down below of 132 and 135 billion dollars respectively at 24.6 and 24.3. And below this entire region, are we going to get a Bart Simpson down to this to fake out the breakout here? As of the 6 month, it looks like it's juicier to the downside, and that's explains why they gap down. Basically, they gap down to go immediately to that pool as if they don't exist. We saw yesterday how support and resistance lines can be manipulations to snag liquidity on both ends. So same with this green candle does not necessarily mean that there's support here. It just means they're pinging liquidity to set the trap to go to the side with more. We've gone over this day in and day out. Even when we were down here, there was more down here at that 618 bounce down here. There was still some down on the table, and we bounced off the 618 of this range, and we came up to that 25.5 region, and we were talking about that too. And that was basically because on these higher time frames you had this hot region up here, 174. You want to come here and say what's up? You had the cotton candy? You want to come say hi on the YouTube? You finished it? You want to come stand here and say hi? No? I don't have any more candy for you. Sorry, kiddo. So yeah, they came back into this region, and even though there was some more down here to take, they just shift out when it's time to shift out. So if this is more to take up here at 30, there's 100 billion at 32.8 and 32.4. If the bullish narrative is on and people buy the bullish narrative as we drop, they could come down. There's 192 billion down at 24.4 now. So if the BlackRock ETF, which needs some enhancement, that plays out to come down further, you could Bart Simpson your way down to here perhaps. You never know. So this is getting pretty mighty hot down below. This is 174 pinged up to 192. So you brought in like $30 billion in the last 3 days. Technically 12 billion in the last day. So 12 billion has been pinged in the last day in longs. So longs have brought in some, even though their liquidation point is down here, there's been a lot of longs pinged in. And if you go back to here, nothing really changed in the shorts. Yeah, no change in the shorts. However, if you look here, 180 to 192, that's $12 billion in a day of longs that have been locked in with those wicks. So if everyone's up to the idea that we're coming to the 32.4 region, are they going to abuse that to come lower? That is just the idea percolating on the back burner, just to keep note of. You got 37 billion down at 29.2, 31 billion at the 28.8, 44 billion at 27.6, and 40 billion at 27.2. This has changed to also an extra 13 billion in a day of long liquidity. So there's more longs being pinged in than shorts in a single day. As we go up here, we can see that as well. We have 43 to 30. Actually, no. Here you have 31 to 43. We have 12 billion pinged in that region. So in the 31.6 region, there is 43. There is 12 billion pinged in up here. So coming up to 31.6 could be an idea at some stage. Let's go up to the 2-year time frame, because that's where it all starts to juxtapose with these higher pools on yearly time frames. So this is where you start to see the red hot regions above at 33.2, 32.8, and 32.4 respectively. You have 156 billion, 145 billion, and 159 billion on the 2-year time frame. Do they come back into some of these pools? They did that down here when they came into these 100 billion plus pools before peeling out. Did they do the same thing up here? It could be something to notice as we come up into these pools. The path is paved with liquidity. It is mighty far to come down to this level without taking some of this off the table. So putting in a new high could be on the table in the weekly candle close. So we got the weekly candle close in 2 days. Let's go back here. You got that 40 billion up here at the 31.8 region. So let's go into our oscillators and the Binance chart and take a look, shall we? Boop, boop, and boom. All right, so what is this little bit of happiness? Link in the description for more, momentummaster.info. You can scroll down to features, toggle switch your way over to see what it looks like, and it's at Bitcoin's bottom. Before we knew it was the bottom, or you can look at each component and read about what they do. Dynamic alerts, for example, inform you every time you get overbought or oversold across 7 time frames of information. So we're going to take a look here at what we were kind of looking at, and we're flirting with the idea of a cross down event. So if we close a daily candle in this consolidating range at this exact level without going higher, we are flirting with the idea of a cross down event with the baselines above the price. What do I mean by that? Well, when you get cross down events on Momentum Master, this is your baselines. They're your first sign of reversal. The baselines are one of the few leading moving average formulas you will find in the market when price action rests on or above these, and the baselines begin to cross, but upside begins. Conversely, as the price action closes beneath these and the begin to cross, downside begins. While this formula works well expressing the first signs of reverse fatigue on all time frames, this will ultimately be a scalper's dream. So as we flirt with this idea with the baselines above the price action, this does the same thing it did here with the cross up and the price action above the baseline. It flirts with the idea of coming up. This flirts with the idea of coming down. And these things tend to play out. So if you have the price action beneath the baselines and struggling and overbought into resistance, then boom, you can see this just as easily. So yeah, having the baselines above the price for a short idea is something to look at. We do have this impulse retrace 236 entry model we provided to you at 30,764, which has remained true. No daily candle has closed above that. So this 236 to this path to the downside, the Hail Mary down here at 28,676, also a daily support and resistance level that we could come back into if this does play out. The cloud is tapering on the daily time frame in a manner showing that certain levels could fall off here. You do have a kind of double toppy situation that could be occurring on the daily time frame. You are getting a curvature for the possible push up on the stochastic RSI. The leading MACD formula has already crossed over, so you did get that daily dump signal. We were talking about this average coming up to the Williams here a few days back. On Monday we were talking about how this gap doesn't suggest the drop would be inbound just yet. And so yeah, as we approach the average, then you'll start to see this cross down potential event, and then the cross down could fake you out like this and then see yourself to the upside on the lower time frames. Here we were oversold on the stochastic RSI, however, so if we start to come down on the stochastic a little bit more, maybe we could see this leg up again to the 32.8 and 32.2 regions on the daily time frame. If we go to the 22-hour did get a reset, starting to get that potential suppression of the Williams / daily time frames. The money flow is beneath the RSI. It did come up to that, so we're at an even Steven point for that to be suppressed down as well. When the Williams is high like that, we don't just buy off the stochastic RSI. This is why we combine the Williams. You can go to your strength function and read about what the strength idea with the Williams %R and coinciding grander narratives of a trend continuation or reversal, rather than just looking at the RSI and the stochastic. So this could get suppressed by the Williams if it opens up here and comes down to the 50 level. Just to note on the 22-hour time frame. If we go to the 12-hour time frame, we're going to see that we're at the top of the Keltner channel band, starting to flirt with the idea of breaking down out of that, coming to the super trend level, which has been holding since Monday, June 19th, and coming down 5% to that level, perhaps recovering some of these vectors on the left. You are getting that suppression idea. The money flow is extremely below the RSI, suggesting that you come up more on the 12-hour time frame. Does that occur immediately, or when this Williams starts to come down? You do have the alarming event here that could occur here, and when you get that alarm come down a little bit more on the Williams, similar to this, then maybe you could see at least below the 50 level, or a bounce off the 50 level back up. But as it stands right now, the Williams is suggesting suppression, similar to what happened here on March 23rd, where we got this suppression from the 12-hour taking off because the Williams was high. This is why we coincide the Williams with the stochastic RSI. These are back testable ideas, and this is why the alarms should have you alarmed, pardon the pun, to the idea of a stochastic takeoff here on the 12-hour time frame. If you go to the 6-hour time frame, we're going to see that this could be a shoulder, head, and a shoulder on the Williams that could take us out at the 50 level. We are getting ambiguousness on the 6-hour. The one bullish thing is the money flow coming beneath the RSI. We do see this deviation start to occur. So this could find support on the 50 level and come up here. One thing we were noting from the other day that we were pointing out in the Discord was the candle close of the 6-hour, and the curvature of the cloud here and the thinning of the cloud is it's thinning in a manner that's even more sharp of an angle here now than we were previously looking at. So we're kind of seeing this curvature alluding to the idea of a taper in and possible reversal of that, of the 6-hour time frame. What is the trend cloud? Well, it's a volume weighted cloud formula which expands and thins according to the amount of volume present in the asset. So the fact that this is thinning is showing that the volume is also thinning. and it uses a 𝗥𝗲𝗹𝗁𝗲𝗀 formula and all this fun stuff. And then when we break and close candles beneath the cloud, you start to see some downside potential. Similarly, we had that with the 4-hour, where we broke down beneath the thinning baseline here, and then we bearishly retest, and boom, we saw some more downside. So are we going to see this kind of bearish retest, thinning of the cloud idea, and then break down 2% from that cloud kiss? Here we also saw this cloud shift up, but obviously with the options expiration, it was a stop loss hunt. We saw that 6% indecision doji candle. So this thinning of the cloud, holding of the cloud, we're basically coming back again to bearishly retest the 4-hour / 6-hour here on that curvature. Are we starting to come back down here? This could be like a little mini diamond pattern too. If you go to the let's do our due diligence on the oscillator. So this is flirting with the idea of coming up here. That was basically the liquidity grab we went over on the 1 minute of all these pools. So that is why it curved up on the K line here, but could easily just open the trap door and release all the momentum to the downside for a fresh reset and bring this Williams down. So bringing the Williams down to that double bottom fertile crescent idea like this on June 15th, this is the ideal longing situation where you get that green oversold region with the stochastic and the money flow and everything in a nice manner. That with a double bottom idea on the Williams. Williams also expressing some divergence is an interesting idea to note. You notice how this had a double bottom and the values were the same, yet you had lower lows on price action. This was also suggestive of a momentum shift to the upside. So are we going to see some sort of double bottom event as we make a lower low, and then this comes to a lower region here? That would be the ideal play to see. So this is why we take a look at the cross down events. I wasn't necessarily sold on like a massive long, because we're in premium territory, and you're getting these cross down events and flirtations on these higher time frames. Like the cross down event, just to reiterate, cross down was confirmed since back here, so you had seen a slow bleed out from this point all the way down to here for 4% gains if you took that cross down alone. Then we started to see the slow bounce off the cloud back up to this region, but it was fighting resistance because the baselines were not in your favor. You did get that cross up ever so slight, but then immediately the cross down is back in play. So the 6-hour cross down event is still potentially suppressing the price, and we have that cross down event also still in play on the 12-hour, which is why we couldn't even muster the strength to get above the baseline here on the 12-hour time frame. And then if you go to the daily, as we said before, we're flirting with the idea of a cross down event on the daily. So these things bring with them algorithmic pressure to sell. So there's a lot of bot trading and other algos out there that use their signals based off information we've compiled within the suite. So that's why we have it in the suite for you to take advantage of as well. We're getting closer and closer day by day to getting to understand the way the algorithm works, and that's why we bring it to you with the Momentum Master Suite. So if we come back into, we were looking for a kind of come back into this retrace area of the 618 pocket of this impulse to the upside to see if there's strength here at the 30,232 region. It also coincides with the bearish trend-based fib levels. If the trap door does not open at the 706, then it is given permission to go back up. So that also coincides nicely with that region. So looking for some sort of reaction here at the 706 or not is something to note. Ideally, you'd like to recover all of this wick and start to build a narrative structure out of here in a bearish manner. So I would like to, personally, I would like to see an A, B, like C wave down here, kind of like this consolidation just brings us down to like clear this with some consolidation, and people get bearish, and then more bears step on the gas, and then we shoot up. That's what I would like to see. That the ideal thing would be spawn some divergence and get a lot of bearish sentiment around this point as we start to break these ideas and then come out. Because there's a wick that needs kind of recovery now. Recovery of the wick is liquidity that's still here that could come back into, and just like they came back into this candle to recover this fair value gap, they could come back down and recover some of this juiciness below. We are in the Asian range. We are starting to come back into the cloud. The cloud previous resistance started to thin out, and we are now crossing down on the 15 minutes, starting to come down here on the super trend, potentially breaking and coming into this pocket for Asia. Asia normally pumps into Hong Kong if they are dropping it, and so this is coming down around that around this time. We probably are going to go sideways. We're getting a vector candle with the Williams alarm reset potential coming into play as the 15-minute resets here. You want to open it? Can I get it to you in a second? You want this one? You want to say hi? Not really? It's kind of melty. Can you get me another one? Get me a new one. New one, please. New. He wants to have some juice ice. Apple juice ice. Ice, not ice cream. It's like an ice bar or something. Those little like things with two things you snap and you get at like the swimming pool. Anyway, yeah, so yeah, I'll cut it, but you need to get a new one. This one, these things. Can you get me a new one? Because if I cut it, it's gonna get juice everywhere. Get a new one, new one, okay? Can you get him a new one, please? It's melting. All right, so yeah, this is, we already broke this 5-minute super trend level. It did come up in a strong manner here, so that makes sense. 5-minute could get suppressed by the 15-minute reset. Let's just go back and see where we stand. We are getting kind of a rounded toppy feel with the cross down. This was a cross up, but it could just as easily cross down here as a suppression occurs. Is this a new one? But it's melted, you see? I want you to go into the freezer and get a new one. Hold on 1 second.
Shut the doors.
I want you to get it. All right, so the hourly time frame coming down here in a manner that could reset as it. All right, so yeah, this cross down event is coming down and possibly resetting some of the liquidity here. We do have a lot of 150x characters down below. Let's just put out the point of interest and then bid you adieu. If we come down into these liquidity zones on the 1 minute time frame, we do have this $220 million character down at 29,643. 29,643, please mark it off. 29,643 will do the same. 29,643. So all right, right there. So there is a $220 million pool chilling in this wick right here. So are they going to come back into this wick and gobble up that character down here in the wick or not? I would like to see the double bottom down here for me to feel secure in taking the long. If you're comfortable with taking a drawdown of 2-3% drawdown to not get that sniper entry, that's up to you. If you think that we're going to that higher time frame 32.4 or in 32.8 region, you could just hop in or DCA or ladder in some orders and see what hits. But yeah, coming down to this region, recovery of the wick idea on the 1 minute time frame. You got some pools down here, and it starts to get thick down in this region down here. Let's see, the thick region also at 29,440. That is coinciding nicely with all these little pools, these little bits of happiness that sniped the wick there. Do you have a new one? All right, thank you. You got it. Your sister did it for you? Did you say thank you? Good, good, good. You want to say hi? No? All right, so sorry. Yeah, so you're not going to really see much unless it starts to drop. They tend to like either scale their orders outside the range and it pings in as they drop, and you see these big bubbles in the drops zones. So the hourly time frame is got a thick cloud here to contend with as it's wicking off of it, even though you're getting the cross up event. Does the cross up event get bought back here and we come back into some of the liquidity above? Let's just look at let's do our due diligence on both sides. So you have this side here, you do have a $365 million short pool of 50x up at the 30,929 region. So we can see a guy up here at 30,929. Let's just put it at 30 even. So there's like a $300 million pool up in this region too. So you're literally at the precipice of a rock in a hard place of which side to ping into at this moment. This is what the idea of a symmetrical triangle is. It's basically just pinging the liquidity on both sides. That's why having high block is so fascinating, because you get to see the story or the narrative generated behind the patterns, behind the math, like what is being induced into the charts and where. So it's just a very fascinating thing. And then the momentum represents possibly who they've hooked and the interest they're lying to go lower or higher. And so yeah, we'll give you an update later on, hopefully in the Asian session. We gave you a very good follow through of this drop and the way out of here from the 15-minute cross up and above. So you could have taken this, even though we didn't do a live update per se, we did have that available to you to see in the Discord. So shout out to those in the Discord. And yeah, well, ladies and gents, I would see that we're going to most likely go sideways to ping in more liquidity and reset some of the oscillators, maybe come down to the 618 and start to trend downward would be the ideal thing to see, and gobble up some of these 100x characters, like this 118 million at 30,245. 30,245 would take you down to just around the 618. So coming down to the 618 and potentially bouncing off of that for a reaction would be the next thing for me to see. And that's my story, and I'm sticking to it. Let's go see what's up in the chat. What's up, CNC? What's up, everyone? Dingo, how you doing? How you doing? Well, on that note, we'll just bid you adieu. Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same, bringing the fire, the precision, the accuracy, and all that fun stuff, and we will catch you